Hey guys, hope you're doing well. Yeah, I hope you had a great week, a peep week. Yeah, so on this video, it's been requested by many people about lower time frame confirmations. Yeah, how I go about the lower time frame because I always insist that if the lower time frame does not confirm, you don't enter. Yeah, no confirmation, no entry. Yeah, so I'm gonna explain how you wait for a lower time frame confirmation when the price reaches your point of interest. So we are assuming we are already at our POI, our point of interest. Yeah. So what are we waiting on the lower time frame? I usually look at the M5 and the M15. Yeah. Yeah. So this is what I look at. There is two scenarios of confirmations on the lower time frame. You can look at it as on the ICT model or on the S&D model, the supply and demand model. Yeah, yeah. So let's start. We're assuming the price is already at our POI. Yeah. So let's assume it's a buy setup. For this example, I'm gonna use a buy setup. So we assume the price is heading to our POI. Yeah. So what are you looking at the lower time frame? So at the lower time frame, I'm looking at, let's start with the ICT model on this side. Yeah, so on the ICT model, the price usually comes at the POI. First, maybe makes a supply there. The price comes at the POI. That's the POI now. Then heads towards the, let me start with, so the price usually comes to the, this is the ICT model. Yeah, it makes some supply there. Yeah, so it forms a lower low at the POI, then break structure, break this previous demand zone, supply zone. It breaks the structure upwards and then return to the source of the move at the almost at the POI, and then it buys. So that's a confirmation. You wait, you wait for the ICT model. Yeah, so let's label it. So you usually wait for a break of structure on the previous supply. So the previous supply should be consumed. Once it's consumed, you wait for the return to the now I'm gonna call it the demand zone, that pushed the price up. Yeah, yeah. The demand zone that pushed the price to break the previous supply. Yeah. So these are our previous supply zone. Previous supply zone. Yeah, so this is the demand. The demand that was this was the demand that was responsible for consuming the previous supply. So you wait for a price to return to that zone. Yeah, they call it the LTO, the return to the order block. So this is the order block. Yeah, there's the previous order block to get consumed by this order block. Yeah, so you wait for the return. So your entry will be here. So this is what you wait for in the lower time frame. So this is your entry. Yeah, this is your entry. Yeah, but there are some aggressive, there's some aggressive traders who will enter at this zone at the POI, exactly at the POI. But for safe in the lower risk, like here, if you enter the market at this point, your stop loss will be at these wicks, below this order block or this demand zone. Yeah. But when you enter aggressively at this demand zone, your stop loss will be, you don't know even whether the price will stop. Sometimes the market or the price will just form a wick and then respect. So that this entry, keeps you safe from those stop hands and manipulations. Yeah. So for aggressive traders, he will enter there with a 20 pip stop loss. You don't know if whether the market will stop or not. But this lower time frame, yeah, I usually like you will only react if price does this. Yeah. So you will not be forcing a really bearish, strong bearish candle to stop. Yeah, you're waiting for them to stop. Then they give you the confirmations and you ride. Yeah, so you're not forcing a setup. So I have discussed the both models, the ICT and the supply and demand zone. But let's do a an S&D model confirmation. So for ICT, for ICT it's like this. Mm, so guys, I had a problem with the network. Yeah, so the network is okay now. I'm sorry for the inconvenience. Yeah, these Wi-Fi providers, sometimes they let us down. Yeah, so that was a bit of ICT and supply and demand like style. But I want to talk about the supply and demand style on its own, because that's what I use most of the time. Yeah, so on supply and demand, I usually look at a fake out. I must see a fake out. We are talking on a buy model right now, the buy setup. So I usually wait for a low to be formed before the POI. Yeah. Okay, let's start this by but it can be better. Let's assume this is our POI. So this was our POI. So let me draw these. Let's assume this is our POI. This one, that's our POI. So for the supply and demand model, I usually look at this price to come and form a low before the zone. So usually wait a low to be formed before the zone. Yeah, I usually call it a fake out. Yeah, if you look at it on the left side, usually a fake out before your zone, your point of interest. Usually wait for a low to be formed, and then it forms a high, and then a low is formed in the PY. Yeah, so that's what I look at. Yeah, okay. So that's the lower low, and then that lower low can can form, not a must, but it can form a demand zone here. Yeah, and then break the previous supply and then go buy. So buy setup. So this is an S&D model. Yeah, you can take screenshots after this. Yeah, so this ICT LTF confirmations. This is the S&D model. S&D LTF model. Okay. Yeah, so for the S&D, I've said that I usually wait for a low to be formed before the POI, above or below. In case of a sell setup, it's usually below the POI. So yeah, I'm waiting for a low to be formed before the POI, and then a lower low to be formed inside the POI. Yeah, then after that, this is the lower time frame. So then it might, or not a must, this is not a must, but there usually a demand zone being formed here. So here we have a rally demand zone. Yeah, yeah, and for the ICT, for the SND, we call this the QM level. Yeah, this is the QM level also. QM level, the head and shoulder thing. I always talk about. So this is the QM level. So for my entries, for my entries, I will enter at the return on of this level. You see. So I will wait for price. I'll wait for the price to come and test this zone, the QM level. This is where I wait. This is my entry, on the lower time frame. Yeah. So as I've said, it's not a must. It forms this zone. Yeah. So the entry is usually on the lower. You enter using this lower. The low formed before the before the zone, and then you wait for the return at that zone. Yeah, so that's usually your entry. So I like the S&D model because it has more confluences. Yeah, ICT model doesn't have so much confluence, so I prefer this one because you see this zone, it has this demand zone, it has this lower, so the zone is more significant than these. You see these, it's only an order block, and then return to that order block. Nothing is supporting it. So for me, I like this one because it has more conferences. Yeah, and also you can see some divergence. Those who trade divergence. Yeah, so you can see here there is some divergence. And also now the indicator you're using to check on the divergence. Yeah, so I like the S&D model because it's 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 usually it has more confluence. Yeah, it's more significant than the ICT model. Yeah, I should rename this to OB. Yeah, so those are the two models. You can take a screenshot. Give you a minute. Yeah, so whatever model you use, just make sure your zone is supported by the price on the left side. You find a zone which is more significant. Yeah, so those are the two models I use. Yeah, so I've told you guys I use the S&D model. Why? Because it has more conferences. Yeah, you have to look at the zone that has more conference. Yeah, because that's the zone that will have a lot of conferences. Yeah, so guys, we can look at chart examples, or if there is something you want us to talk about, you can live chat down there. Yeah, but this video was purposely on lower time frame confirmation because most people are requesting that video. Yeah. Yeah, so Yeah, so those are the two models. Yeah, so we can look at the chart examples. Yeah, so we have said that you wait for the price at the POI. Yeah, so this was I forgot to write here. This was our POI, yeah? The higher time frame POI. Yeah. So when the price reaches your POI, on the ICT model, you must wait for the price to reach the POI. Yeah. Yeah, and then wait for the lower and narrow to the lower time frame M5 M15 for the confirmations. But for the SND, we start monitoring the price even before the POI because we're waiting for. I usually wait for these low to be found before the POI. So on ICT, on SND, we start monitoring the trade before the POI. Yes, to see what's forming because we want a very significant zone to be formed. Yeah, so that's it. So this is a demand zone is responsible for consuming this supply zone. So this is why we're waiting for the price, and it's in line with the QM level, and it's a strong support. Yeah. So ascending model is a bit realistic. Yeah, that's why I like it. It has more conferences. Yeah, so let us look at the chart examples. So if you look at this GBP, the pound Aussie setup, if you wanted to catch this by setup, how do you catch it? Yeah, so let me change the cursor to an arrow. Yeah, so if you look at this pound, the Kembo Aussie, so the point of interest was this significant zone. Why is it significant? We have these support, resistance, support. You see, yeah. So the zone was significant, and then it had a rally base rally demand zone. So we were waiting the price. I always say these guys, the price is always at the weeks. Pesa iko kwa weeks. So I usually, as you can see from my setup, I think you have seen, my entries are always at the weeks, because that's where the money is. I believe that. So let's look at the ICT entry and the supply and demand lower time frame entry. Okay, yeah. So there is some aggressive trader, yeah, would have entered aggressively. Yeah, you see. Yeah, but we want the safest entry, the lowest risk entry, because talking the truth, you don't know whether they will stop here or they are down. So what you do is react after they do something. Yeah. You don't want to force a candle that is, strong bearish to start reversing. No. You are not a banker. Yeah, so we now to the lower time frame, wait for them to form a support and a resistance and react on that zone they form in. Yeah. Okay, we're gonna start with the ICT model, I think. Yeah. And five. Yeah, I caught this trade actually. I had entered on an upper POI. I got stopped at break even, and then I used this one. I had entered this setup here. There was a POI. Yeah, some good builds, but I didn't take them. Stopped at the break even. Then I got this setup. Yeah, so on the ICT model, what are we looking at? So we can see a low and a lower low be formed. Then there is the break of structure. Yeah, there is an opposing order block. The order block, this order block get taken out by this order block. This is the order block that push the price. Yeah, to break this zone. Yeah, so the ICT model, you wait for the return to this order block that was responsible to break the previous supply. Yeah, and enter the trade. And it's usually a sniper entry, a low risk entry, 10 pips, 15 pips, safest entry. Yeah, so you can, with such a risk, stop loss, you can use a big lot, yeah, for big profits. Yeah, so for the S&D model, it's more of the same here, but if you practice the example that I've shown you, you see the S&D model usually come more often than the ICT model. Yeah, sometimes you're gonna wait for the price to, to reach the order block there down, but there is an SSL above it, the significant zone above it. Yeah, so you're gonna miss that trade. Yeah, but for this case, so as I told you guys, I usually wait for a low to be formed before my POI. So you can see a low was formed before the POI, then a lower low was formed inside the POI. Yeah? So this is our QM level. Yeah. So this is where I wait for the price. This is our QML. Yeah, so that was our QM level. Yeah. So or the return to order block. But I like the S&D model, but practice both. Yeah, but the S&D model is the one that usually appears more frequent. Yeah, so that's it. You get the safest entry, but you see, if you'd have entered aggressively, yeah, you'd have entered at this lower low, the price rally up, then the next day you are in break even or in some faint red, and then there's a lot of mixed up. To mess your psychology, you start seeing like the price is now selling, you see. But when you're patient enough, you will get the best entry, the low risk entry, the entry, a trade that even when it hit your stop loss, it goes with some small profit. But for aggressive entry, you never know if the price will stop here. So your risk is, you start risking in terms of how much I want, you start risking in terms of pips. Yeah, you can say I will risk 30 pips because I don't know whether I stop here or here or here. No, but for a low, when you wait for a lower time frame confirmation, you sure if the price is going up, it's not supposed to go past here. You see? Yeah. So you sure if you press your SL here, if they grab if they grab the SL, yeah, they going down. Yeah. But for the aggressive trader who enters here, he doesn't know where the price is going. They're gonna stop. But for you, you sure if you enter here, the price should not pass this point. Because if it's going up, why go below this? You see, that's why the lower time frame are very confirmations are very important. Yeah, because you sure if the price is going up, it's not supposed to go below this zone. You see, yeah. So I'm also an aggressive trader sometimes. When I'm a bit busy, I place my limit orders. Yeah, so when you're on the screen, kindly wait for this confirmation. Price will never just react and go without this confirmation. It always gives this confirmation. Yeah, so patience, guys, patience. And something I said, I think this week, before we knew to trade this before we knew to trade, we were always holding losses. Yeah, you find someone like me holding a loss of 100 USD. Yeah, when we were beginners, when we were new in the market. So if we were holding such an amount of losses, why not hold some profit? Yeah, so don't sometimes I say it's all or nothing. Yeah, instead of taking some small profit, I usually say it's all or nothing. So you'll find me holding a setup at 100 plus pips. Yeah. And one thing about swing trading, not actually swing, because swing trading is holding something for a month or a weeks, but let's call this some swing trading. You have peace. You can do your other jobs. You can travel. Yeah. But for scalping, you have to be always on your machine. Yeah, trading, 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 trading. Yeah. By end of the week, you can't even enjoy because you are tired. But for this swing trading, you have a lot of peace. Yeah, that's why I like it. Yeah, so it's that, guys. Unless there is questions, yeah, I wish to end the video. Yeah, so let me scroll to that page. Maybe there's someone who joined and want to see the lower time frame confirmations and take some screenshots. Yeah, so let me go back down there and show the examples. Yeah. Yeah. I hope my sound is a bit clear. I know it's not so much clear, but I'm hoping it's not that bad. Yeah, let's minimize this so that all the content can fit. Yeah, you can tell me on the comments below if my sound is clear, if my video is clear, if it's bringing all the resolutions, the 1080, the 720, or it's on low resolutions. It's my first live video. So I know it's gonna have some problems. Yeah, so those were the ICT and the SND lower time frame confirmations model. Yeah, choose the one that fits you. It's not a must use SND, not a must use ICT. Yeah, so you can use the one that present, because it's not always that SND will present. Can present the ICT confirmations model. Yeah, so you must be you must be flexible. Yeah, work with what it's on the screen. Work with all the prices giving you on that time. Yeah, don't say I'm an S&D trader. Yeah, I'm a die-hard S&D trader, so I'm not gonna use ICT model. Yeah, stick to the one that you will see after the back test. You work with the one you see that it's respecting more, and you will see in each pair, maybe you find this pair respect the ICT model, you find this pair respect the SND model, so you have to be very flexible. Yeah. So but I like the SND model, and the reasons I've told you. Yeah, the SCT model usually present a very significant zone, the QM level. Yeah, so I like that. I like the SND model because usually there's a fake out. So for the SND model, for the for the SND model, yeah, we've seen a low is formed. Low is formed. Low is formed before the POI. Yeah. Number two, we've seen there is divergence. Yeah. Number three, we've seen there is a demand or a supply zone created at the QM level. Yeah, a strong, a significant, let's call it a significant zone, a significant zone. Yeah, so you see it has more confluences. Yeah, so I like the supply model, the supply and demand model. But you see for the ICT model, we've just seen an opposing order block, and then the return to that, the order block responsible for the break of the structure. Okay. Yeah, so the S&D model is more has more confidence. Yeah, so I prefer that. But I've told you guys, be flexible. Use whatever is on the screen, whatever price is given. Don't say don't be left behind by a setup because you're an S&D and there's an ICT setup that presented. Yeah, so that's it, guys. Unless there's some questions, I wish to end the video. Yeah, guys, share the link. Yeah, guys, the the forex time continuum. It's all about the forex trade. The forex time continuum community is all about helping people. Yeah, we don't charge anything. Yeah, it's a way of it's a way of giving back to the community. Yeah, because that's the much I can do. Yeah, because I've struggled in this forex life. I've really struggled. The people we started this journey with can tell you. So this is a way of this. This is what I always tell you guys. Because some people come to my DM and ask me, yeah, how do you benefit from this? Yeah, and I'm like, wow, you know, I tell them I don't do this content for to gain anything, but because I learned my forex for free, I'm gonna give back to the community for free. Yeah, so yeah, that's it, guys. So guys, practice patience, and I told you guys, yeah, I told you guys, if you hold losses, if you used to hold losses, why not be patient for some profits, for some big profits? Yeah, so if you analyze your setup and see that your TP1 is around 30 pips, hold it. Yeah, yeah. Stop running away with 40, 30 pips. Yeah, I'm not saying don't bag 30 pips. It's good to pay yourself something. Or move your stop loss to break even. To so that your mind, psychology can be a bit stable. Yeah, so what to people should practice patience even for profits. Yeah, so I think I hope the video was I hope the video was I hope the video was okay. Yeah, so guys, I'll see you on the next video. I'm gonna upload more content this weekend. Yeah, when I get some more time. Yeah, so guys, those are the lower time frame confirmations. And on our next video, as requested by many of you, is when you have 2 point of interest, what should you do? Yeah, that was one. And the next one I guess was about validating your supply and demand zone. Yeah, I have three on my diary. And the third one is the third one. The third one is about the trade line, the trade line breakout strategy that I promised. The supply and demand model. So the supply and demand model of trade line breakout strategy. Yeah, the trade line breakout retest strategy. Now the supply and demand way. Yeah, guys. See you in the next video. Thank you for those who joined the live video. Yeah. I'm humbled. Yeah. And guys, share the link. Let's grow this community in order to help others. Yeah, yeah, yeah. Bye bye. Ini kita